You're probably already running the numbers on rental properties and they're not working. At today's rates, a $350,000 rental runs you about $2,280 a month in principal, interest, taxes, and insurance. Rent in most markets on that same property, around $2,100. So you're losing money every single month just to own it, right? That's not a property problem. That's a rate problem. Here's the thing. There's a way to buy that same rental at a 2.75% interest rate instead of 6.8. And I don't mean refinancing later or waiting for rates to drop. I mean buying it right now this year at a rate a seller locked in back in 2020 or 2021. It's called an assumable mortgage. Instead of getting a new loan, you take over the seller's existing loan. Same property, same balance. Their rate becomes your rate. So let me show you what that actually looks like on the same $350,000 property. At 6.8%, you're at $2,280 a month. Rent comes in at $2,100. You're negative $180 before you've touched a single repair. At 2.75% on an assumed loan, your payment drops to $1,429 a month. Same rent, same property. Now you're cash flowing $671 a month. That's over $10,200 a year just from the rate. $10,200 a year on the same house. That's maxing out a Roth IRA every single year from one rental. Now you're probably thinking, okay, this sounds too good to be true. Why isn't everyone doing this? Most people don't know it exists. FHA and VA loans are written to be assumable. It's right in the loan documents. But rates were falling for 40 years, so nobody needed them. Agents forgot about them. Lenders forgot about them. The whole thing just went dormant. Rates went up. Assumable mortgages came back. And right now, most investors haven't caught on yet. The equity gap is the one thing you need to understand. If a seller owes $300,000 on a property worth $350,000, you bring that $50,000 difference to the table. That's your cash to close. From there, you step into their loan and their rate. I've had buyers get into properties at 2.99% with as little as 5% down, using a second mortgage to cover part of the gap. The blended rate still beats anything a bank will offer you today, by a lot. I'm Ryan Thompson, the Assumable Guy. I run a list of every assumable property in Colorado, and my team does this every single week. If you want to see what the numbers look like for your situation, come find me at assumableguy.com or find me on Instagram, the Assumable Guy. I'll run it with you.